ticker symbol FNGR finds the upside that we were looking for from our inflection point, which is the key support area that we were looking at in a macro time frame. There are several signals that we have to talk about, team, and also the fact that we're going to be facing some pressures from the Fed tomorrow during their meeting. Let's go ahead and go over those potentials now. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a FNGR technicals, raw price action, and statistical threat of analysis on this happy, what day is it today, man? Taco Tuesday. You know what day it is. Let's go ahead and get this moving, right, team? Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, team, so what you're looking at here is just like you saw in the intro, right? These are the ARQ algorithms that we just released. These are the updated versions. These are tuned up and tighter, considering price action a little more or a little differently than before, right, team? So these are the re-release of the ARQ indicators. Okay, team, so let's go ahead and take a look at this right here. We have a long signal printed, of which we mentioned yesterday, right? So this was right at the end of the day, printing out this candle here. So it has not actually given us a short signal just yet, so it is still suggesting a continuation to the upside. Same thing with the momentum versus volatility profile right up here, which is actually the enhanced MACD. Okay, team, please notice here that we have a bull signal printed a little bit more aggressive than the armor itself, right? It actually printed it at the opening of this candle here, which was around 391, opposed to the armor printing it right over here at the opening of this candle, which was actually around 425, right? So, but it just goes to show that they do have some different characters here, and they are in fact printing these long signals in very pertinent areas and incredibly important areas. Okay, team, so it looks like we are starting to expand via the Bollinger Bands displayed within the enhanced MACD, with momentum suggesting a continuation to the upside represented by the dots themselves. And with the bull signal printed, we are absolutely approaching the mean, and everything is looking really good here, team. Okay, team, so let's just go ahead and take a look at a couple things here. If we were to have followed this downside from this short position here, which actually fired right at about this candle right here at the opening of valuation of this one, 561, and let's say we played it short, right, and then it took us right back here to cover at this position here with the long signal fired at the opening of this red candle. That would have been a 23.92% gainer on the day, right, team? So this one here too, if we were to taken this trade here at the opening valuation of this candle, let's go ahead and take the measurement from this. We had the short signal here saying sell at the opening valuation of that, and it was a 130 spot, 30% move to the upside based on this long signal. Okay, team, so yes, we are looking at some pretty exponential moves. Definitely consider getting in touch with us at arqindicators@gmail.com, and we'll get you situated as soon as possible. These do come in a group, right? It's going to be a group of around 8 to 9 indicators, and this is particularly for trading views. So go ahead and click in the link in the description below, and you'll find the trading view link there as well. Okay, team, so let's move on to the next chart, because we are looking pretty good here for the ticker symbol FNGR thus far. Okay, let's go ahead and see what we have here. This is the correlation chart that we're looking at, team. Go ahead and notice that GTII actually found a little bit of resistance from the mean band, as it would happen. Okay, not exactly weakness, but it is actually knocking at the door there and building a what looks like to be a bull flag, right? Pretty nice. And also FNGR, this is where we actually identified that potential bottom side support, right? Located right at the top side of that of the Gaussian band. So now, yes, we do have a pretty nice setup right now. It does suggest a continuation to the upside, but I do have a different outlook here. Okay, so I'm going to show you something very interesting, which actually makes me way more bullish. Okay, so let's go ahead and go over to that chart. This is the bi-weekly time frame, right? This is we're actually trading this in the weekly time frame, this broadening descending wedge. But there's something critically important that we need to look at here. First of all, I mean, first and foremost, right? Let's go ahead and just look at the very obvious things. Okay, bi-weekly 3 white soldiers. Okay, this candle formation here is absolutely bullish and suggests a continuation to the upside. And yeah, so and we can actually identify that there is some respect to candle analysis based on this iteration here, right? Right back here, we actually printed a bearish engulfing, and price action ended up continuing to the downside. Another bearish engulfing iteration here, price action went to the downside, right? So it looks like our asset is respecting some of this candle analysis, right? So this is very good for us. It's good because we now know that there is a potential based on candle analysis. Other than the fact that it's on the biweekly, and biweekly candle analysis has a good hit rate in overall, right? So go ahead and notice here, this is a bearish engulfing as well, downside. Now the next thing to notice is, yes, that this is not only a one candle formation deal. This is actually a buy formation together. So this is a combination right here, team. This is what we call the tweezer bottom, followed by this three white soldiers before a continuation to the upside, breakout retest, and the retest is perfect, by the way. And then we have that nice bounce to the upside here. Please remember that by the traditional rules, this broadening descending wedge is traded in this manner, right? So we have to respect the golden rule of three. We have test number, actually, right, we're looking at this on the weekly time frame, right? So let's go ahead and just pull those tests up. And let's see. How do we, or was it the 5-day or the 3-day? I forgot which time frame we're looking at it, right, team? There we go. So we have test number 1, test number 2, creating this candle formation that even in the 3-day is forming. Good to see this here too, right? Tweezer top, right? We get that capitulation based on test number 2. We have the test number 3 and the huge capitulation from it. We have the true test breakout number 4. Okay, so following the golden rule of 3 pretty nicely. Let's go back to the bi-weekly chart and take a look at what's going on, right? So yes, I am noticing here that we're getting a very good rejection from that support line. The newly converted, it was a resistance, right? We resisted here, and then essentially we resisted here and came right back down. And now it's converting that resistance into a support, right? So now we're getting that bounce to the upside. Okay, team. So now the next thing to look at are these things. This is where it starts to get very, very interesting. Okay, bi-weekly Gaussian band. This was the mean band right over here. We came back and tested it, bounced right off of it. Okay, and now we're suggesting an upside. We're knocking at the door of the top side of the bands. Why this is very important is for the following. Please notice what has happened anytime that we do validate as support this mean band. Look at the explosions that it actually has done, right? Even when it comes back down, it still manages to succeed the outside of the Gaussian band, right? So here's another iteration here where we face that support and then boom, huge explosion, right? So very interesting price action that we're facing here within the Gaussian band, and we're getting that test right now, team. We're getting that test back to the mean band, potential bounce to the upside, and I do have to tell you that it's looking highly likely that this can continue on to the upside here in a pretty aggressive manner. Okay, team, in the coming days, maybe week, I'm not sure, but it's looking very, very strong. Let's go ahead and get away from this and now take a look at this, okay? So in the moving averages themselves, right? So let me pull up, let's see, whatever we're looking at right now. I'm going to get rid of the, temporarily I'm going to get rid of the SMA 50, right? So let's go to the weekly time frame. And go ahead and notice this, right? So this is actually something, I'm not sure if I actually mentioned this too, but our moderator and analyst in our Discord, right, Sebastian Lim, pointed this out live today too. So go ahead and notice this, that he called out a silver cross on the weekly time frame, of which is why the price action is starting to reject. Not only are we're touching this. This is ridiculous, man. This is huge. We're getting a macro time frame silver cross. This is absolutely bullish. Okay, team. So we're touching now. This is about to cross maybe in the next, 1 to 2 days potentially. As soon as we do get this cross, price action will react to this. Okay, team. So now let's go ahead and get rid of, or start adding here the SMA 50 as well, because there's something that we do have to talk about there within that as well. So let's see the 5-day time frame. And yeah, look at the 5-day time frame silver cross, right? Look at that. Look at that. Very, very nice. And it just so happens to have crossed somewhere around today, and we're starting to get that pump to the upside, followed by a bounce from the SMA 200, which was very close to the bottom side of the 385 that we were looking for down here, right? So that is incredible for this asset. One more thing to notice here, team, is that this 5-day candle, I believe, just closed, and look how it closed. After a downside, you get a hammer candle print that is usually indicative for a continuation to the upside. Not only that, is that if you start to look, if you start to look at the price action in this manner here, it starts to look like a bull flag, doesn't it? Right? So looking very good thus far. Okay, so now let's go ahead and finally get rid of our EMA 21 and 55, which are the ones that are indicating the silver cross. And let's go ahead and look at, first of all, let me go ahead and see if we have that daily. There we go. Okay, team. So, of course, we already know that we got the 12-hour golden cross right back here, right? But the one that we've been focusing on is the daily time frame. Okay, team. So, yeah, go ahead and notice here how close the moving averages are getting to each other. Okay, so if I am gonna see some type of explosive activity here, it's gonna be when these moving averages cross each other. This is the SMA 50, the shorter time frame, simple moving average crossing over the SMA 200. This would essentially make a golden cross. We were talking about the potentials of coming back down to touch on that SMA 200 at 338 to 340 something, but we didn't get that, right? We actually used the first area of inflection that we were talking about, right? That's why we had two areas to look out for. We had the newly converted resistance into support of the broadening descending wedge, and of course the SMA 200 itself, right, team? So we got that bounce from that 385 zone. We had a total range of 380. I think it was 383 or 385 to around around a 385. Okay, so sorry, it was a 330. Yeah, 338 to 385, I believe it was total. Okay, so yeah, the next thing that I want to talk to you about here is this. Okay, so I am seeing here that we could be facing a resistance soon, and this resistance is actually, it's pretty much going to work out for us nicely. Okay, so this is what I'm speaking of. Okay, on the bi-weekly time frame, this is particular to the bi-weekly. I'm not sure that we can reach all the way to this target here just in one day. Of course, anything is possible, right? But 658 is the next area that I'm looking for, or slightly lower, right? So hold on, I'm gonna go ahead and show you this. Okay, so yeah, 658 would actually not do it. Not just, I wouldn't say right away. Let me get rid of the Gaussian band. I'm going to present to you what could be a massive bear trap. So if you are still listening at 12 minutes and 25 seconds, I do apologize, but I also have so much to talk to you about because this play is definitely getting ready for a serious run. Okay, so yeah, that next inflection zone could be around 540. I'm going to give you a range here, okay? So please notice here that we have a 12-hour gap back here, okay? You guys know how I play. I use the entire field. Okay, and then we also have these two candles here, right, for resistance. I'm going to go ahead and say that I would favor the top wick, which is near the gap itself all the way back there. So 528 to about 548, right? This is about as tight as I can get. We can experience a retracement from there, okay? So let's go ahead and just go over those potentials, okay? First of all, let's meet it with some fibs. Let's take a retracement from the yesterday's swing high to swing low, and see what we have there. Okay, so yeah, we do have some high relevance here to the 2-spot 618 at 556. We're talking about a resistance from 549. Okay, perfect. Now the bottom side is also very tight with the 2-spot 272, giving it an even higher probability that we would be facing some type of resistance from that area there, right? So very good. Now you can see here that on the 12-hour time frame, we're bouncing very nicely off of that SMA 50, right? So this would essentially have us continue onwards and upwards to this target here of around the 2-spot 618 and retrace. Okay, so now if we're going to retrace, this is what I'm talking about in the play. Okay, we're going to continue to the upside here. We'll get that retracement from this side here, and then we would come back down to validate several areas of confluence. Okay, we have the 477 at the 1-spot 618, right? We also have the 487 at or 485, right? Actually, to be tighter, at this newly converted resistance into support of the broadening descending band, right? So that's the other support too, and by that time, I can see that we may have a few moving averages there for us. Okay, so what I'm saying here is that we may be building the top shoulder of a head and shoulders. Okay, so then we would actually get the retracement and continue onwards and upwards. Okay, so let me show you that formation here. Okay, we can draw the shoulder right over here, right? We'll get the head right over here, and the second shoulder, we'll get it right down here, right? So this is what I'm talking about here, team. Let's draw our neckline, okay? Because this is a bearish formation, but what I'm telling you here is that I believe that the bulls are preparing a serious bear trap. Okay, so yeah, let me go ahead and take into consideration the other candle, this one right over here, right? So just, oh yeah, that's a very clean neckline, a perfect regression, nice. Okay, so that means that we take a trend line from the top side of the head all the way to the bottom side, right? Just like this. Then if this were to play out, right, the way the bears are thinking, then we would essentially get the bull trap up here, right, somewhere up there, and they would essentially take the price action back to this inflection zone, which is very confluent, right, to around $2.28. But they are not seeing what we're seeing here. They are not seeing the Gaussian band, right, on the, I believe it was the 5-day, right? Let's just remember that we were on that the 8-hour, it's 12-hour, right? So let's go ahead and take a look at a couple things here. So let's go to the weekly time frame. I want to identify where that was before we continue talking here. Let's see the weekly. And let's get the monthly in there somewhere. I know we have it right around here, right? There we go. The monthly time frame Gaussian band is located right near that support zone from this line, right? So this is the bounce that we're getting. We're starting to break out of the monthly, the quarterly, right? We're breaking outside of the quarterly right now, and there could be that retracement, of course, right? We're talking about that retracement back to test the top side of the newly converted resistance into support before a bounce to the upside. Okay, that's one thing that they're facing, right? That we're facing. Okay, here's another one. On the 12-hour time frame, we can see that the Gaussian band would be located. This is the same time frame that we were looking at before. So upon making a continuation to the upside, you can see that the Gaussian band would essentially move into this area right over here too. So this is going to serve this indicator here, right? This is the Gaussian band. We would face a support from that as well. So it would be the quarterly chart Gaussian band support from the top side of it. It's also going to be the 12-hour Gaussian band from the top side support. And it's also going to be the newly converted resistance into support of the broadening descending wedge. Not only that, is we also have the one spot 618 at 477. Team, there's a lot rhyming here. Okay, so when you have that much of inflection, that I would start to favor the upside a lot more than the downside. So that means that their play would essentially be a huge bear trap. Okay, and this now would belong to the bulls right about here-ish, right? So let's just go ahead and apply that target. I think let's see, if we were suggesting the top side of, yeah, so actually it would be probably right up here, right? So if we're suggesting the top side of the shoulder to be this area, we apply the trend line to the top side, and guess where it takes us? It takes us upwards to around 1355. Why is that target so familiar? Well, if we're looking at the price action here, let's go to the weekly, right? I'm not sure that we're going to face it the same way, but go ahead. Yeah, this is where we're trading it, right? Maybe the 3-day even, right? So this, yeah, the 3 days where we're trading it, the broadening descending wedge, and per the playbook rules, it is said that we are to trade this formation and take profit from the genesis of the formation. Located where? This is saying 1413, right? And we're suggesting here 1344. So that's pretty close to the take profit area, and very curious that it would be taking us there. Well, can we validate this with fibs, with geometrics? I don't know. You tell me. What does that look like? 1393 at the one spot 618. I'm going to tell you right now that I didn't plan this. I didn't plan to put the fibs there. I just did it right now. Swing high to the inflection, swing low. That's it. In a quick manner. And then this is the target that we're getting. Team, this is ridiculous. Okay, there's absolutely something happening right here. And yes, I am saying that there is a potential of hitting 14 bucks on this damn asset. It's huge. Next thing to look at. All right, go ahead and stick around here. I understand that it's going long, but if you're gonna go long this asset, then you should know exactly the play. Take a look at this. This is our golden pocket, located between 1378 and 484. Where's the price action? Bouncing from the 385, which was just upside of the knot 382 in the golden pocket. We're already knocking at the door of the knot 618. We're about to combat it. And look what I'm saying here, okay? We break out, we come back and test a few things here, right? So 477 is located very close to the knot 618 of the larger time frame at 484. Funny how things rhyme, right? So yeah, they're thinking that we're gonna push these guys down and fail the golden pocket, but no, the golden pocket has too many supports, inflection points, right, team? So that's what I'm looking at here. I am already long the asset. I'm already above 60%. I'm already above 60% up. I am waiting for a pullback here to a potential pullback to around 392. I would say about 392 to about I would say around 410, right? 392 to 410 maybe could be another pretty interesting area to look at for reaccumulation, of which can happen maybe next week. But before then, we're gonna have some pretty nice upside, and I do suspect that we can close green by Friday. All right, team. So this is amongst all this crap that you just heard. I have one more thing to show you within that. Okay, this is what we're looking at here. Let me just make sure that we are seeing this all clearly, right? Yeah, this is crazy, team. I'm sorry that the video is long, right? But we have to see this. All right, let me get rid of this thing right here because we don't need it. And of course, we're not going to focus on any of these drives over here, right? So what you're looking at here is the divergence chart. This is actually the opposition. Divergence is the opposition of price action versus momentum, okay? So price action represented, of course, by price action itself. Momentum represented by momentum, right? So let's see here. There we go. I forgot to draw the line. Let me just make sure that I have that line drawn right over here. Okay. Opposition, remember? So momentum suggesting a lower low and price action suggesting a higher low, right? So what does this tell us? If we go over here to the chart and start looking at the bullish variety, then whenever we are getting a lower low on a momentum and we're getting a higher low in price, this is called a hidden bullish divergence printed on the bi-daily chart. Very powerful and already suggesting a continuation. Not only that, bi-daily closure happened. Let's go ahead and look at this. Bullish engulfing printed right there. What do you know? With a drive of hidden bullish divergence, team. Oh man, there are so many signals to talk to you about here. Okay, so now this tiny head and shoulders that the bears are building, right? This is that. Sorry about that. This is that shoulder head, and then that potential upside here for another shoulder. That doesn't have nothing on what's going on here, team. This is in the process of creating our shoulder. What shoulder am I talking about? Well, look at this here. Shoulder, head, and shoulder. My goodness in heaven. What is no, this little thing. No. Okay, this is being played wrong by the bears. They got to cover. They got to get out. This is not a time to short FNGR. At least in the shorter time frame, man. This is ridiculous. Like, this is setting up one of the biggest traps of life again. We already had called it before, right? Actually, I call a bear trap on several tickers now, right? So if we were to face an upside from this area here, well, I don't even know that I feel comfortable talking about these targets here, team. Yeah, I don't feel comfortable about talking about these targets right now, but just know that I guess the formation is suggesting it, right? So let's leave that there for now and evaluate it whenever we do get there, right? So it's just as bad as I don't know, team. All right, so let's see if we can geometrically back it somehow, right? So if we are to geometrically back it, then damn it. I'm not gonna say it out loud, okay? Because that's just freaking crazy. That's lunacy, right, team? So don't tell me that, man. That's crazy. All right. So another thing I'm gonna just do real quick to see if it lines up, right? So there is regression here. Oh my goodness! Get out of here. All right, so it is matching in every which way imaginable, so, but we're not going to say it out loud, okay? So just you keep it between us. Shh, don't tell anybody, okay? But we know what could happen here. The potentials of this crazy target, okay, team? Please, please, please remember, team, that first and foremost, the most important thing of this whole thing right here, all right, is for you to remember to take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, okay, team? I need you to do your own due diligence, and everything will be cool, okay, team? But with that said, I wish you well a very, very good night, and I will catch you at the bell, literally, mañana. Adios.